Good morning, everybody. Welcome back to Schwab Coaching. It's the Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from Denver, Colorado today. Pleased to be joined by fellow coach and my friend, Brent Moores. Good morning, Brent. How you doing, buddy?
I'm doing good, Kevin. Doing good. It's April 2nd already. And, yesterday was April Fool's Day, and I got tricked yesterday by someone, a teammate I was very fond of, a coworker I was very fond of, sent an email saying he was leaving the company here. And so it took me just not too long to realize it was an April Fool's joke. And of course, for everyone watching, it was Kevin, Mr. Kevin Gates, or Kevin Horner sending out an email. So I was glad to realize it was April Fool's Day, but you gave me a little shock yesterday there, Kevin.
Well, I'm glad to hear that I got somebody out of that, Brent. I'll be honest. My thought is if you can give somebody a good laugh in the morning off our first email of the day, then that's a good way to start things. And of course, because it's April 1st, most people wake up, aren't really thinking about those things. We're all just kind of in our work mode, of course. And so it's easy to skip some of those things. So I'm glad I caught somebody yesterday with my silliness. But yeah, I'm glad yesterday's over. It's probably the worst day to be on any social app out there. You don't know what's real, what's not.
Right.
What we do know is that we are anticipating some kind of clarity today from the administration on tariffs. So we all know today is anticipated to be Liberation Day, according to the White House, Tariff Day for those who maybe are keeping a very close eye on the market. We're going to look at how the market is reacting to these expectations this morning today, everybody, and try to level set a bit. Of course, that's all going to happen after market close today. So plenty to keep an eye on throughout the day. Hopefully we'll give you some levels that might help you base some decisions as you go throughout your day today. Could be a lot of hands off for many traders, though, today, to be quite honest, everybody. Let's get into the nuts and bolts of stuff, huh? Let's cover the disclosures, and then we'll move right into things. So first of all, remember that our conversation is exclusively informational and educational. We do not make recommendations nor endorsements for a specific strategy or approach to trading the market. Please, additionally, keep in mind that as we talk technical analysis, it's important to think of this as merely a piece to the puzzle. We don't encourage you to base decisions exclusively off technical analysis. We do think, however, that use of technical analysis in conjunction with your fundamental analysis may be a proper approach that some traders are comfortable with. And again, thinking of it as a very large puzzle piece, the more data we have to work with and make our decisions, the better. All right, in terms of our standard agenda, it's more of the same, everybody. We'll start with the broad stuff. We'll hit up the S&P 500, the NASDAQ 100, the Russell 2000, and of course, work our way through sectors and industry groups. Now, before we kick everything off, I'll just remind you, we'd love your follow on X. You can follow me there at Kevin Horner CS. Brent's available, Brent Moores CS. And today we are also joined by Barb Armstrong in the chat. Please take a minute and engage with Barb in the chat. She'll get to comments and questions Brent and I are unable to get to, but she is an excellent follow on X as well. Barb Armstrong, CS. All right, everyone. So let's take a look at what's going on with the S&P. We've had a little bit of a bounce there off of the lows we made with Monday's week open, Brent, and we got into the 20-day moving average yesterday. But of course, seems like this morning, traders of the last buying up the lows on Monday were more than a little happy to take profits at yesterday's close or even early overnight today into this morning here as we're getting a little bit of weakness to start things off.
Yeah, I mean, so yesterday was, I don't know if it was surprising, but yesterday we had a nice little rally, opening up lower today. And something that maybe for some people don't realize, the official kind of announcement regarding the tariffs is going to occur at 4 o'clock Eastern time today. And for those of you who aren't aware, the market closes at 4 o'clock Eastern time today. So those of you expecting, and I did not realize this, in fact, I need to adjust a couple things in trades I've done. For those of you who don't realize this, that the action, the extra action, the action in reaction to whatever the White House announces is after the market closes today. And I think, Kevin, that was probably intentional, huh?
I would have to think, right? I mean, of course, doing it throughout the middle of the day would have certainly created opportunity, right? And
Yeah.
volatility in the market. But what's unclear is maybe why, Brent, because, if it's a positive for the market, do we want the market to be open and active and ready to rock and roll? Or is it a negative where they're wanting to see maybe a week open the following day? I really don't know, Brent. What are your thoughts?
So this is a tough one, and I don't know, but sometimes, sometimes letting people digest the full information. Make this analogous to, say, an earnings report. Sometimes you have the initial numbers, but then you get some follow-up information, and you can react differently once you actually hear the conference call and whatnot. You're able to digest it. That's just speculation on my part. I don't know. But anyway, sometimes before things like Fed announcements, it's kind of like a low trading day, low volume day. I'm not sure we're going to see that here in this case. This just feels a little bit different in that regard. This doesn't feel like the calm before the storm, because we've seen increased volatility lately and not decreased volatility. So I wouldn't expect a low volatility day, but I guess to your point, we're opening a little bit lower today here after the rally that we had the last couple days here, I guess.
Yeah, it's a weaker open, but let's look at how it relates to the priced action that we've seen over the last 2 days. An easy way to do that, Brent, might be with the 5-minute bars here. If we drill into what's gone on since Tuesday's open, we'll see. Let me see what's going on with my pivots here. My pivot points are a little bit skewed, and it might be just a setting that I want to only show today. So there we go. So just check this out, everybody. We gapped lower through our support line 1, and now we're rallying off that. So we want to push back into and through the 56.15, 56.20 zone at the pivot point. That'll help give us a little better indication here as to our opportunity for the day. Really, it's that pivot we want to get back up above. Watch for how we handle it on maybe those 5-minute bars. If we get into that 56.15, 56.20 area, we want to see consecutive 2-3 bars in the 5-minute chart, Brent, that reflect breaking through, holding that pink line there at the pivot. That could give us at least a little bit of an idea as to how maybe today intraday is going to be managed. Is there more that you're watching here on SPX?
I would just say, for traders out there that are technicians, that use technical analysis, the same technical tools that you use for longer term timeframes, trend, support and resistance, things like that, can be used on these intraday charts. In this case, we're using pivot points as potential support or resistance levels. And we'll also take a look at the trend. And so we'll see trends develop throughout the day, whether to the upside or the downside. And we'll look for key turnaround areas at support levels and resistance levels. There's our first resistance level, that the pivot point, that purplish color. We'll see how it reacts to that, and we'll also look and see if that trend can sustain itself intraday. But whatever it is, just like we've seen over the last few weeks, I mean, it's always true, I guess, but it's been especially true the last few weeks. Whatever you see in the AM hours isn't necessarily what you're going to see in the PM hours, or whatever you see for 1 hour isn't necessarily what you're going to see for the next hour. Things. That's the kind of the trademark of a volatile market, is things can shift pretty quickly intraday.
They sure can, Brent. And one of the ways we can monitor that, and a lot of traders have been keeping a close eye on this, is just the corollary between the S&P and the VIX. If we keep an eye on the VIX real quick, you can see that it's fading right off the open as we get the rally in the S&P. So that stands to reason. But I've got a note here, Brent, that the level to which we saw the VIX pop is that same level we were at yesterday and the level from which we got beaten back. So that tells me at that ledge, that's a pretty important level. That's about a 23.5 VIX. And if we move through that with any semblance of conviction to the upside, it lets us know that traders are growing less comfortable with the movement in the S&P 500 But instead of selling off S&P 500, Brent, they're protecting their positions, which is a little different because our spikes in the VIX have been fairly minimal by comparison to the bigger moves, right? That move we got into the 30 level in early March is not what we've seen from the selling. And so I know there's a lot of investors and traders wondering, how can we be at lower lows in price? And yet the VIX is just hanging out at a subdued 22 or so. That's a big question for a lot of traders, Brent. Do you have some ideas on that?
Well, there's a certain, if you look at some of the past spikes up, like we had in, was it late July, early August? Look how short term that was. And look at December, the spike. Look how short term that was.
Yeah.
This tariff situation has been, it's not a short term news flash. We don't know. This is something that has been on traders' minds. We've known April 2nd and now pushing into April 3rd, I guess, since it's after market close today. We've known about this. And so I think it's kind of kept the VIX elevated here for a little bit longer period of time. And so people have kind of, done a lot of hedging already at this point. And, to your prior point of, the VIX going up, it means that people are likely, it probably means people are hedging portfolios or positions in portfolios when it does go up there on that. But that's probably more likely, you're more likely to see that. Intraday, if we see the VIX spiking up quite a bit, you're probably going to see a concomitant drop in the SPX at that point while you see that VIX spiking at that point.
Yeah, I think there's been some positioning, Brent, that may be keeping the VIX a little bit under wraps. And what I mean by that, and Carol's asking for me to kind of restate this, let's just remind ourselves of what the S&P, the VIX really is. It's the reflection of put options being purchased on the front month of the SPX contracts and essentially utilized by big dollar investors, deep pocket investors, hedge funds, et cetera, to protect long SPX positions commonly. However, in this instance, what we've seen is that there's actually been more positioning out of S&P 500, I think, over the last 3 to 5 weeks or so, Brent. And that means that traders haven't needed to employ SPX puts because they're sitting on maybe a larger cash position. And that's why perhaps, and again, I can't state anything unequivocally here, of course, but that might be why we're not seeing what many traders would call capitulatory price action. We're not getting substantial big moves to the downside, resulting in a flood of investment dollars into positions. And the concern, Brent, is merely that if the selling remains orderly, then how can we get capitulatory bottoms? Meaning the market tends to oversell true bottoms, and it feels terrible in the moment. And you need to see as an example, the SPX commonly will make a low completely unexpected to be made by traders. It gets to a point of true pain where nobody expected it to go. That's when we get capitulation. And those are scenarios where we see the VIX spike into 30, 35, and 40, Brent. We're not seeing that, which may imply that there's more opportunity for the trend of downward action to continue instead of to get capitulation moves. Does that make sense?
Yeah, that makes sense to me, Kevin. And I think that's a great point. Let me just add just a couple things. One, just because we've seen a particular way that the market has sold off in the past doesn't mean it's necessarily going to sell off this way this time. This is a little bit different. A lot of times when the market's selling off, it's like something, wow, out of the blue, we don't know. This is kind of a weird event here where regarding, and it's not, the market sell-off isn't necessarily all related to the announcements that are going on today later, but that's clearly a factor in it. And, this is a unique situation. And so it may be a unique time this time around. So we'll see. And if what the market, when the market digests the news, and if it deems the news positive, it certainly, you'd probably expect the market to react positively and possibly even in a significant positive manner. And if they deem the news very negative, then maybe then you see the capitulatory action. I don't know. We'll see. Or, who knows? But the line you drew on your graph, that white line, that kind of right now is looking kind of double bottom-ish.
Yeah.
We'll have to see, because that's a pretty significant level. If we break below that, that's a really bad technical signal, I guess I would say.
Sure.
On that. And so we may know in the next couple days here on that
we
too.
could also be a scenario, Brent, where we need more time to play out, because the reminder that I'm given, of course, is that we frequently, and I'm going to move over to the NDX to highlight some of this, everybody, we frequently gain big moves in these bearish scenarios. We have an opportunity to add a pretty healthy percentage to something like the NDX, Brent, and still remain in our downtrend. Let me give a brief example, just utilizing the NDX here. Look at where we rallied last, right? Was right into the 200-day, and we failed there. That was up to 20,300 or so off of the low here at around 19,000. Let's call it 19.3. So we added a pretty quick 5% pop right to resistance and then rolled back, right? Made that lower low. Now we could experience an even bigger pop right back into that same ledge, which would reflect yet again either a matching high or a potential lower high that could then be followed by a lower low. Now, the reason that that might present an opportunity for capitulation action is that many traders are going to look at a potential bounce at this point as their opportunity to do what they've been doing all along for the last 2+ years. This bull market has been relatively stable and predictable. Buys have been made on pullbacks of 9-10%, and traders have benefited. But something has changed in that trend of late. And if that change in trend is more important than the trend we were working with before, well, then rallies into resistance are apt to be sold and could suck in the more of those bullish dollars, which could lead to quick exits, and that could lead to capitulatory action. So the question becomes, do we get enough bulls to believe that this is their ultimate bottom? And then do we get the rejection? See, that's where sentiment can play a huge part, Brent, in whether or not we get those true capitulation bottoms. Right now, we don't have that type of action. And I think that's one of the reasons that traders are a little bit staying on their toes, staying on the balls of their feet, right? And maybe taking advantage of relief rallies for what they are presented as right now. Just that, relief rallies, take your trade opportunity, but be disciplined in that process.
That's great. A great point, Kevin. And let me just say one more thing here on this. Just, tomorrow, not all the uncertainty in the market is going to go away. I don't think we're going to see a VIX down at 12 or 13 tomorrow, regardless of what comes out tonight in that. There's still concerns about economic softness. Now, we did have I think a generally positive ADP employment report this morning. However, there's still concerns about inflation and other aspects of the economy as well that can certainly affect the market going forward, that go beyond just, some uneasiness about tariffs.
Yeah, I agree. Don't expect that all of the unease and unrest suddenly goes away tomorrow, but it is potentially one aspect of that uncertainty that gets moved off. As it relates to the NDX, of course, we want to see a move through that 19.7 area that represents approximately the 20-day moving average. If we can get through the 20-day, then we start talking about that second white line at former resistance there, the 200-day moving average. Again, that presents as the opportunity for a matching level. If you're wondering about where could we feel as though the NASDAQ has maybe made the move and we can talk about getting back into gear or back into trend, it's a ways off. For a lot of traders, Brent, it's that 50% retracement of the sell-off. And if the low we made on Monday is the low of the sell-off, well, then you can see, everybody, the approximate level we got to get through for many is going to be that 20,500 level right about here. And you can see that's a ways off, Brent. That doesn't feel like it's imminent, does it?
Yeah, and that's a frustrating, tough thing as a trader, because a trader, you want to pick up the lows if you could, ideally, and realistically, it's very difficult, and we don't encourage you to even try typically. But by the time you're getting back in, if you're waiting for that 50% level to be reclaimed, then you're probably, the internal narrative is probably like, well, crap, I just missed like all this, this move up here. That I could have done. You can be more anticipatory on these. You can put in trades at a lower level, but it's just there's less confirmation there. There's more overhead obstacles there that aren't there, that are going to kind of confirm the true reversal in the market at that point. So you never know. The market's uncertain. There's risk. But if you do have cash, if your portfolio isn't fully invested right now, then it does give you the opportunity, when you deem it the appropriate time, to deploy some of that at a cheaper price than when it would have been back in December or January.
Yep. As always, Brent, tied to your time frame, right? I know a lot of traders out here are looking for speedy intraday moves that are going to give them opportunity. For a lot of you, it might just be, how do we act if we get into that 20-day moving average? Do we find that to be resistance on a short-term intraday basis? A lot of traders will monitor that. And then maybe you get some intraday moves based on movement through a zone of resistance. This is one of the things that a lot of traders just do all day long. They're just monitoring intraday levels, adjusting lines, adjusting those levels, and placing trades based on action against or through those levels. It's where that planning process is so important to the trader. Brent, let's move off of these NASDAQ 100, S&P 500. Let's look at the small guys. The Russell 2000 broke down from a bear flag and fell right back to support. Now, Brent, we are trying to fight it out yet again, aren't we? That looks like just another potential bear flag right here.
Yes, it does. And so it's hard to argue with that. I would agree. We're in a downward trend, and we're right at the lows, basically, just a smidge off maybe. But that 2000 level, in addition to being the level approximately where that low is, it's also a big round number on small caps, and sometimes that kind of comes into play as well. So we'll have to see. We're mostly holding our own today on small caps, but from a purely technical standpoint, I mean, from a positioning standpoint of the index itself, a lot of the same forces that are going to affect those larger cap indexes are going to affect this. So I wouldn't expect a completely divergent move in small caps versus large caps here. But the trend is down, and that is a flag breakout, little consolidation here. If we can bounce off this, that's adding some notion to the idea that the 2000 is a support level. But if we break below that, that's just kind of starting another flag pole, likely in the case of as part of a bearish move.
Yeah, that's certainly a possibility, right? Traders need to be positioned or aware that could occur. It's equally possible, though, that there's a reason that all the selling and the action, look at all the tails there in the last 3 days. It's been very volatile, right? Just this 3 days of action. Traded below, traded above, closed right on 2000, traded below, traded above, closed right at 2000. So again, we are basically seeing the importance of the 2000 ledge. And we've also noted it dating back into the spring of last year. It's been support for us. So it's a very important level on the small caps. We got to keep an eye on this. I did note we have a survey opportunity in the chat. Needless to say, Brent and I would really value your feedback, everybody. If you click that link briefly, it'll just open in a browser window right next to this one, and then you can get to it post-show. give us, a score if you'd like. You can give us your comments. Let us know how we're doing for you and what else you might like to see in the Trader Talk segments. We would really love to hear from you, everybody. Thank you. I see a bunch of other comments in here just about expectations. Some of you expecting, George is saying, more confusion and a lack of clarity, even more uncertainty available for us. Not out of the realm of possibilities. That much is for sure. So plenty to pay attention to here as we move forward. I do think it's important to listen to narrative and pay attention to what is being stated, in terms of what traders are monitoring, watching, and thinking about. But at the same time, it's just as important that we as investors, and I'm going to say a lot of the same stuff you hear from me on a Monday, Wednesday, Thursday, or Friday here, everybody, which is to know your level of pain. What is pain as you define it? And what do you want to avoid? What do you not want to see for your portfolio? The best thing that you can do to manage potential pain in the market is to be in a scenario of investment dollars on the table that you can handle if you get moves against you. And when I say moves against you, I want you to be thinking about moves you don't think can happen. What happens if we sell down 10% from here quickly? How is that going to feel in your gut or in your portfolio? And do be honest with yourself. If you lie to yourself, you're going to be absolutely dealing with more pain than you want. Be as honest with yourself as you can. That's the best approach I found to really manage difficult periods of time. Speaking of difficult periods of time, Brent, we have to talk about the semis here. We have a couple of interesting lines drawn in on this chart. The one that I'd like to draw your attention to is the first red line here, which was support along the way. But I've also drawn in, as you can see, a nice little pivot point move, a Fibonacci retracement from the lows of 2023. That was really the rally in the semis that we got. This could be considered for many traders, Brent, that 61.8% retracement level, possibly a last-ditch level for the SOX to not round trip this entire move here. Your thoughts on what you're seeing on this one?
So as stocks drop or indexes here drop, there's different potential levels where they can reverse themselves. We call those support levels. And when one breaks, then we kind of look for the next one, next man up, so to speak.
That's right.
Next level. And that's the level we're at. Now, so far, if you can zoom in just a little bit there, Kevin, if you look at the last, I think, 3 days, do I have that right? Last 3 days, we're right there. And it appears at this point that maybe there's something to this support level here on this. There's this Fibonacci level as acting as support. So that's the first step. The first step is, sometimes you see stocks or indexes go through support or resistance levels and almost like they're not even there. Yeah. In this case, it does appear to be there. It appears that that's what's happening. We'll have to see because we got a little ways to go before we hit the next support level below this one.
We do. So needless to say, this could be, at least I say needless to say, but let me restate that. If a market technician were looking at the price action and thought of the rally we have undergone since October of 23, thought of that rally and that bullishness as being valid and still available in terms of the long-range trend, well, it puts a ton of importance on this 4250 zone for the SOX indice here, everybody. So keep a real close eye on that level that we're trading at as we speak. This could very well be a bounce spot. It could equally be a breakdown spot, under which could mean more pain for the SOX. One of these comments I'm going to bring in from my friend Dave here in Oregon. Everyone claims a high pain tolerance during a bull market. Boy, is that well stated. I've seen that time and time again. We are always more comfortable with risk until the moment risk arrives. Almost 100% of the time. So as always, like I say, be as honest as you can with yourself, everybody. That'll benefit you in the long run, I think. Now, Brent, we're seeing, I want to go back to the S&P briefly for that 5-minute bar check in here. We are right back to that pivot, just as we called out. And I said we needed See how we act over 3, 4, 5 bars as we move into that pivot point. And I can already see that at least for the first 2, 3 bars, it looks as though we are meeting our resistance there. So giving you something to monitor intraday, that importance of 56.15 on the S&P 500 there, everybody. So that seems quite notable. Another comment in the question was, in the queue rather, was asking about international. Brent, just generically, I wanted to speak a little bit to this, but it seems as though everything we've seen in the way of U.S. markets, in the weakness we've undergone over the last few months, has been leading to more positivity as it relates to international markets. Now, generally, I get to international when we get the opportunity on Fridays because we can employ ETFs. But Brent, is there anything you'd like to say as it relates to the breakdown as we think about international versus domestic markets?
So what I would say is one, this is going to sound like a shameless plug here, Kevin. I posted, I think it was yesterday, I kind of retweeted, but did a little quote post on the difference between emerging markets and the U.S. markets, and how emerging markets are outperforming U.S. markets. And there's actually a fair amount of detail in that post you may want to check out there. But right now, international, look, money goes somewhere typically, right? I mean, it can go to bonds. So it can go to, you can say in the U.S. and go to different asset classes. And to some extent, bonds have rallied lately a little bit. But it seems like some investment in the U.S. is going international right now too.
Well, it's been a long, long time that international hasn't been really participating in the market the way that the domestic U.S. market has. And so for a lot of fund managers, or I should say portfolio managers, that component has been a smaller percentage. And what I'm hearing about nowadays is a lot more shift in the underlying makeup and composition of portfolios in the U.S., incorporating more international exposure to mitigate some of the domestic U.S. risk factors that we've been discussing for months now. So one of the things to bear in mind, it doesn't mean that traders need necessarily to keep a closer eye on it, but from a long-term perspective, investors, certainly it's something you want to be paying attention to. So checked out, post out that Brent made. This was on X, everybody. Yet another reason why we encourage you to follow us there. So you can find Brent there, Brent Moores CS. Brent, as it relates to other areas, I thought we could hit on a couple of key moves that we've noted. There's been big moves in materials. So again, I want to just look at the charts, not really discuss strategy or anything like that, but point out that the move in gold has been continuing. You have not seen a whole lot of drawdown here, have you?
No, I mean, I don't know what to say because I've been saying the same thing for months now here on gold. But that's, gold is this area where this flight to safety type instrument. And when people have more unease in the market off, gold can outperform, and gold is outperforming. And from a technical standpoint, that's one heck of a trend. And, gold has had a good, strong couple years now, but last quarter, even before the first quarter of this year, gold was like doing really well. Well, first quarter of this year was its best performing quarter in a few years. And so I don't know what to say other than, at some point gold will peak out, but we haven't, but to this point, well, that's an all-time high yesterday on gold.
Again.
Yeah. That keeps happening.
I mean, we were talking just a week ago about breaking through 3,000. That was the all-time high. And here we are $150, $170 over that already. So yeah, it just continues. Now, it's not like silver is terrible either. Silver has been lagging in terms of percentage moves. There's more commercial applications for silver than gold. So, you think about it from that standpoint, you could maybe understand the flight to safety that is working with gold. But, this is one of those charts that looks pretty strong as well, a pretty well-defined uptrend working here. So, another important area for potential monitoring is silver here. Anything on silver that you've been thinking about, Brent?
I would just say in terms of percentage moves, if we think about some of the percentage moves that we've seen about a 10% drop in the SPX. We've seen about a 30% drop in the SOX we were looking at.
Yep.
And meanwhile, the gain here on silver from, well, we'll say the beginning of last year until now, I don't even know that's like over a 50% gain, I think, at
Yeah,
this
it's
point.
50% to this ledge. If we give it
So-
all the way up to where we're trading right now, the last trade here, it's more like 58% off
Yeah.
of the bottom in February of last year.
So
Incredible.
it just shows, money goes somewhere, and that's where, these are a couple areas where it's going. And whether you prefer gold or silver, it's both have been doing really well. And I'm not sure we need to get nitpicky about which is doing better, because they're both just spectacular of late.
They have been. Now, of course, that's all going to change at one time. We don't know
will.
when.
Yep.
Maybe if we start to get that clarity that so many in the market are looking for from an equity side of things, you're going to see some of these metals pull back a bit. Doesn't
Yes.
mean that the trend ends, but it might mean pullbacks. And you haven't really had many pullbacks a lot on the way. As you noted with gold, the pullbacks have been more or less sideways and consolidations, kind of validating the uptrend along the way more so than a drawdown to any true area of longer range support. You'll notice we haven't even come close to visiting the 200-day since November of 23. So just something to bear in mind as it relates to gold. And then the other one is Bitcoin, of course, as we talk about the risk on scenario. The market tends to look at Bitcoin as more risk on. And we're getting a little bit of improvement in Bitcoin, perhaps have made a higher low with the action of Monday. So some traders will talk about that, but we've not made a higher high just yet. We're going to need to take out that ledge there at around 89,000 or so to the upside. And then, of course, you can see plenty of resistance with the 50-day down sloping through what was potentially that what some traders would call the neckline of that possible double top or head and shoulder top up there. So that could certainly provide a lot of resistance along the way up there at 92. But again, a lot of traders just kind of keeping an eye on Bitcoin as a risk on, risk off scenario for the market. Anything else there on Bitcoin specifically, Brent? I want to make sure we get to some stocks in the news too today.
Just a general comment. It's another asset class. Crypto is another asset class, Bitcoin, and so is gold. But you can see the difference in the performance, and part of that, it's kind of going back to what you said. One tends to be very correlated to the riskier aspects of the market, that is Bitcoin, whereas one is not, and that is gold, that tends to do well even when those riskier parts of the market are doing poorly, when we're in one of these risk-off scenarios. So you can see the divergence there. Doesn't mean this is going to go. I would expect, I don't know for sure, I would expect if you see the market rally as a whole, you'll see Bitcoin rally as well.
I think that's a fair suggestion. The enthusiasm around Bitcoin seems to take on market personality, right? When there's enthusiasm in the equity markets, it's an area that seems to get a fair bit more exposure. And I would probably, keep an eye on it in that vein. A couple of stocks I wanted to get to today, Brent, in terms of stocks in the news. One of them had an announcement yesterday. It sounds like they are doing a little M&A, little merger acquisition. That is Rocket, RKT. Rocket Companies upgraded today to market perform. Previously had underperformed. This is by Keefe Bruyette, and they are upgrading them after the announcement of their pending purchase of Mr. Cooper. The firm believes that this deal creates a more balanced business model for Rocket, gives it more confidence in its earnings estimate. Further, Rocket's 2027 market share goals appear more attainable now that this deal would roughly quadruple Rocket's servicing and unpaid principal balance to roughly approximate $2.15 trillion in assets, position the company to utilize its capabilities in any declining rate environment. So what this is stating, as I read it, Brent, is great detail, synergies associated with the purchase of Mr. Cooper, but ultimately that the thought process from the analyst side of things is that a lightening rate environment would really give Rocket some opportunity for leverage to the upside here, is how I read that. Now, the chart doesn't quite speak as fantastically about opportunity, Brent, but there is some patterns developing here, I would suggest.
Yeah, I mean, I would say we've had a trend reversal, which because when the stock is trending down, uh, the question it kind of always begs the question is when do we actually is it actually reversing and there's different ways to do it. The classical definition of an uptrend is a series of higher highs and higher lows. But you can also use things like moving averages. Well, look, we're now above our 50-day moving average here on that. Our 20-day, we're above that, although that actually took this recent move to get there.
Yep.
But we've also established some higher lows now, and we did fill the gap that we just made a few days ago on this. And of course, that's a news-filled gap, but that's fine. There's nothing wrong with that. So I mean, right now it's showing fairly strong with a fairly significant resistance around 15 is the way I'd look at that.
Yeah, I think that's the clear call out here is the $15 resistance. We were there once in early March there for about a week in the 17th, 18th, 19th, 20th. Couldn't get through. You can see that our highs were all at the same level and then got beaten back and pretty darn beaten back. I mean, we pulled back 3 points, 20%. I mean, just like that. And these smaller dollar security prices can really get some volatility with them. So just be aware of that, everybody. But I think if you're wanting to be bullish on this newly developed opportunity, perhaps, I think for a lot of traders, Brent, it's on a move through 15 on a closing basis, whereby they could set their risk, as in tightly set risk, right back beneath that red line, right? Or maybe beneath the 200-day moving average at that point, giving them a much tighter risk versus reward opportunity. If you're a buyer now and you think it can get to 15, well, your upside's only $1 perhaps. That means you got to be tight on risk, something in the neighborhood of 30 to 40 cents to maintain proper risk versus reward for a lot of traders. So that's one of the reasons that some might sit on their hands here, because really, Brent, I don't think many would suggest that you're going to go lower unless we close below $12 a share. And that's about 2 points away. And I don't know many that are going to want to risk 2 for the opportunity to make 1.
Yeah, so those are trading factors for shorter term traders as you're considering that trade. If you're a long-term investor and you believe in the company and the fundamentals look good to you, that equation may be a little different for you. You may not be considering that resistance as something that's going to keep you out there. But for the shorter term trader, that's absolutely the math you got to kind of use on that.
Yep, I think so as well. And I should also point out that Keefe Bruyette was not the only analyst to upgrade it. Deutsche Bank also upgraded Rocket to a buy from hold. New target there at Deutsche Bank is 16 from 14 previously. And then the last one, we're going to be very quick here, Brent. Make sure we stay under time, is Broadcom. Broadcom was added. Oh, excuse me. There we go. Broadcom analysts upgraded at Daiwa to buy from outperform. New target at 225. That's actually down from 275. So they've made an adjustment to the target, but they did upgrade it. And I'll say, if nothing else, Brent, the move here has been certainly substantial, but is there a reason to believe in potentially this zone we just found as support, perhaps?
I mean, it seems like a significant support level in that we've had a bounce and it's kind of continued for 3 days here on this. However, at the same time, we're in the middle of a trend, a downward trend. And this could just be kind of a bear flag in the middle of a downward trend. And so there's this conflict, if you will, between what the trend is saying and what support level is going to do, which comes out and wins. Very often that trend ultimately wins. But when you get news coming out, you get upgrades and stuff, that can actually change the narrative. So, we'll have to wait and see on that. But in general, that's why a lot of technically focused traders who they often prioritize that trend. And therefore, even though it does appear that this support has held for the last 2-3 days, that's not enough for a lot of technical traders to just jump in the trade for that reason.
I think I agree with that, Brent. I mean, I'd be hard pressed to disagree with you. I can see there's a lot of necessary steps that are going to have to be overcome to shift the view of that downtrend. And frequently those steps are slow and plodding, step by step by step. Up move, down move, 2 steps forward, 1 step back, so on and so forth. They're not likely to be as substantial as maybe the level of selling we've seen with Broadcom, but we're down pretty well. I mean, highs at 250, lows right here at 160, so you're 90 points down. That's better than 30%. Not a fantastic look at the chart, but you could say that risk reward favors entry here if traders like the 160 ledge of support. Now, if you're a short-term trader, I'm thinking a lot of traders are looking at that confluence of that oval right around 180 to 185, 20-day moving average, 200-day moving average, horizontal resistance, etc. All of that could easily be a spot for a relief rally to lose steam. So just be aware of that as well. I think, Brent, we're going to have to wrap it there, but I got to say, it's a busy day today. Loved having you on. Certainly, I feel like we tried to, as best we could, share a lot of insights and ideas for our traders and viewers to keep an eye on today, man. Thank you so much for being here.
Thanks, Kev. Glad to be on. Everybody, there's a survey link in the chat. Feel free to fill that out.
We would greatly appreciate that, everybody. Thank you. Big thanks to Barb in the chat. Hit that thumbs up button down below. Follow the 3 of us on X. And of course, make sure you're subscribed to the YouTube coaching channel here, everybody. Have a fantastic Wednesday. We look forward to seeing you all again real soon.